Who's give crypto a kick up the arse? The market's gone crazy today, absolutely crazy. So we're not looking for the crazy ones, we're looking for the ones that we want to go crazy. Kadena's done its 1, 2, 3 fake out that we always talk about. Fourth one's the break. We can protect ourselves. Where's targets? Let's dive in. And what does Kadena need to do in the short term to follow the rest of the crypto market? In this video, we're going to talk about trends, we're going to talk about gaps, we're going to talk about protections, we're going to talk about projections. So you might learn something today, you never know, I might learn something today. Right, okay, we talk about first and foremost the 1, 2, 3 fake out. What is the 1, 2, 3 fake out? Why is it so important? Because you see this time and time again on trends. You've got 1 touch. You've got 2 touches. What happens on the third touch? Fake out. 1, 2, 3 fake out. Happens time and time again. How can you play the 1, 2, 3 fake out? We talk about making sure that you've got the break and making sure that you've got the close. Once you've got the break and close, that shows that the bulls have broken, the bulls have closed above, and the bulls have regained momentum in the short term. But more importantly, that allows for tight stop losses, because we know now when we're wrong. We're wrong when we take out this previous low and we come back into trend, and that would be a fake out to the downside. So we know that that's when we're wrong. We know that's how we can prepare ourselves. And more importantly, if we are wrong, we want to lose the least amount of capital as possible. So that's all about the risk management. What areas are going to be sticking points? What areas are we likely to get a reaction from? So we stick our fib retracement on there, our trusty fib retracement, and what we're looking for is areas of confluence, areas that we're expecting to get resistance going forward, and more importantly, areas that we need to take back in the short term to turn bullish. So let's have a look. You've got the 382 sat here, and you've got the 0.5. That's showing us that coincides with our previous resistance level. We expect this to become resistance again because it was resistance here. You can see this higher, look, the lower high here. That slam price action back down, we're expecting to act as resistance when we get to these Fibonacci numbers. More importantly, we know exactly in the macro term, this is from an investment perspective, what needs to happen to turn bullish, because we need to take back this level, for that to flip support, and then for us to create that higher low on the macro term. So that's what we're looking for in the long term. We know what needs to happen in the short term. And in the very short term, this needs to happen. We need to regain the 50 moving average. We need this 50 moving average to start trading up like this. And then we want the 200 to carry on its current trajectory. And what happens to the death cross? This is the death cross. What happens to the death cross? Death cross turns golden. Price action will start moving above that, holding it as support, and then starting its way on the bull run. So that's what we're looking for. That's what we're expecting. That's how we can protect ourselves. So let's have a look at the risk management on this. We said about the risk management. Let me just get rid of everything on the chart and we'll have a look at the risk management. Okay, so from where price is currently sitting now, price is currently sitting at 85 cents. We know where our protection is. We know where our projections is. And you can take this two ways. Let's get our long position on. You can take this two ways. You can either go, let me just pull that back down. Got the magnet tool on there. Right, okay, so we can play this two ways. There's price. You're looking to take profits at the 382 and between the 382 and the 0.5. That's where our projection zones were. We've got protections underneath the previous low. So if we were taking that trade, that would be a 2.32 risk to reward. Pull that up. Actually be a 3-to-1 risk to reward. If we were shooting for the previous high, the previous close of the previous high, then that turns it to an 8.03 risk to reward. The most important thing is you know exactly where your protection zone is. That is the most important thing. If you're going to lose, you want to lose this amount. You don't want to be up here, and you don't want to be risking this amount, and you don't want to be losing this amount. It's all about being greedy with your entities, tight risk management, and knowing exactly where your targets are, your projections are, and over what time frame. Are you an investor? Are you a trader? You need to ask yourself that question because it's an important one. Right, if you did find this useful, guys, check out my other videos on Kadena and let me know in the comments what you want me to cover next, and I will see you in the next one.